Dow Futures fell more than 300 points as U.S. Iran peace efforts stalled and investors priced in a higher geopolitical risk premium. The Dow Jones Futures angle matters because the equity move is a macro liquidity signal, not only a stock market headline. The tension is whether geopolitical market risk turns into a durable change or simply a sharp data point. That is why the first read should stay close to the confirmed numbers: 300-point drop, oil up 4%, and the immediate checkpoint around VIX above 22. For a market structure story, the useful readout is how capital, liquidity, rates, or risk appetite changes after the first move. The reason to keep watching is that the next checkpoint can change the meaning of the first move. The confirmed frame is that oil jumped about 4%, Brent traded above $85, and the VIX moved above 22 as traders shifted toward defensive assets. The key baseline details are Brent above 85 and safe havens, which give the story scale without requiring speculation. This scene grounds the viewer before the mechanism takes over. If the baseline changes, the rest of the story changes with it, because the consequence depends on whether those confirmed details keep holding. The most important baseline split is between what is already visible and what still needs confirmation from the next public signal. That scope keeps the segment focused on the mechanism that actually changes outcomes. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The structure matters because stalled talks raise fears around energy supply, inflation pressure, and delayed rate cuts, which can weigh on equity valuations. That is the working engine behind Dow Jones Futures, and it explains why the event cannot be read only as a surface move. In this case, the mechanism connects 300-point drop with VIX above 22. When that connection weakens, the story becomes less about the initial number and more about whether the system, market, or policy process can absorb stress. That mechanism is the reason a viewer should watch process quality, not just the largest number in the story. The pressure reaches crypto can feel the same risk-off pressure when oil, yields, the dollar, and equity volatility move together. For viewers, the useful question is who actually has to react: users, traders, issuers, regulators, operators, or institutions. Here, Dow Futures sits at the center of that reaction, while U.S. Iran talks shapes the next practical step. The consequence is strongest where the event changes access, trust, liquidity, compliance planning, or the cost of making a decision. That makes the impact measurable through behavior, not through hype around the topic. What is not proven yet is the market reaction does not prove talks have failed permanently. It reflects the price of uncertainty while no breakthrough is visible. That limit matters because the confirmed facts do not automatically prove the most aggressive interpretation. The safer split is to treat oil up 4% as established context, while leaving the unresolved part open until a stronger signal appears. That keeps the story useful without turning a partial data point into a conclusion. The open point should remain separate from the confirmed facts until a filing, market move, patch, data release, or official action closes the gap. If later evidence changes the read, the story should adjust around that evidence. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The move to track is the next signal is whether diplomatic talks resume or energy prices keep lifting inflation expectations. For Dow Jones Futures, that is the point where the story either gains confirmation or stays stuck as an unresolved market, policy, security, or adoption question. The practical readout is to follow VIX above 22 alongside the supporting details: rate cut risk and 300-point drop. If that next signal arrives, the story moves. If it does not, the only confirmed position is the one already visible in the evidence. The viewer should leave with one concrete checkpoint, not a prediction about where the market or policy process must go.